Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 1st, 2025. And Bitcoin is not yet on support, not even close. Okay? We have yet to hit our targets, our high probability targets to the downside. And actually, one could say that the dump has yet to even begin. All right, so this is what I want to look at today. If that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it with Bitcoin on the daily time frame. Okay, so the analysis is straightforward. Okay, you've been dealing with Bitcoin in this purple channel, right? It's been 18, 19 days, right? Chopping up in this purple channel that some would say, if they're bullish, it's a bull flag. Look, it's a bull flag, right? Here's your flagpole. Here's your bull flag right there. And, you know, bull flags, they consolidate and then they break out like that. That's what a lot of people, I would say 95% of traders are looking at and expecting, okay? It's for that reason I feel like this video is extremely important. Not to be contrarian, but there's everything about this is bearish, minus the fact that it is in a recognizable pattern that many traders, many analysts, many market participants recognize as being bullish. Besides that, there's nothing bullish about this. Nothing, okay? Not the fact that we are at a multi-year resistance, right? If you consider all of this being resistance and Bitcoin's pretty much at the top of a 300-day channel, not the fact that you have Bitcoin coming up in this entire move, right, since April of 2025, April of this year, with declining volume, okay? I don't use volume much. There are reasons for that. I don't use volume much on this channel in my analysis, but I want to do something a little different today. I want to bring it into to the equation just because I just want to make a few points that I feel like volume would help me make. Okay, but I mean, if you're interested as to why I don't use volume specifically in my personal trading, crypto trading, and in my analysis, let me know in the comments and I can talk more about that in another video. In any case, declining volume multi-month move to the upside, okay, that's not bullish. If you're bullish, what you want to see is increasing volume as the price goes up. You know, more people go into that trade because it's going to continue, right? That's basically a bullish continuation, a bullish trend, that the volume's increasing, not necessarily decreasing as you go up. That's very, very, very bearish. Okay, so that's two things. Now let's jump down into the 4-hourly time frame. Why is this not bullish? All right, besides again the fact that we are in a bull flag, most people recognize as being bullish, there's nothing bullish about this, and we're far from support. So why do people think we're on support? Well, many people believe that this is it. This is a falling wedge, bull flag consolidation that Bitcoin's been in, and that we're at support. And that's partially true. We are at support of this particular channel, this 18-19 day channel. But that support is spurious at best. It's very, very weak support. It's not strong. Why is it not strong support? I'm not just saying this. I'm going to tell you. All right, based off of the chart, based off of the indications that the candles are giving us. One, every time you've hit this level of support, look at how prices reacted. When you hit a strong support, a level of supply, right, or demand rather, if it's strong support, it's a strong level of demand, meaning you go into that level of demand and the buyers buy it up quickly. They buy it up quickly. They buy it up quickly. Well, if you keep that in mind, look now more closely at this channel, this bull flag, okay? Is it being bought up at support? Is it being, are the buyers stepping in quickly and with vigor once you hit that support? This is what you want to see in a proper bull flag. And the answer is quite simply no. We're on the 4-hourly time frame, meaning you need all of these 4-hourly candles just to go back up. There's no strong hammer candles, meaning a strong wick of demand being bought up, or of supply being bought up at the bottom of these channels. Not one instance of it. And this is the third time, 1, 2, 3, that we come down into this level of supposed demand. It's not a level of demand. It's a level of resupply, right? It's a level of resupply. And basically what you see is a lack of demand at support, which means it's not really support. It's not what you think it is. This is not a bull flag. This is a reversal pattern. This is a mini distribution level, right? That's what that tells me. Again, everybody has their own opinion, and it's colored by their macro view of the market and what they think the market should be doing at this point in time, what they think a cycle is, all that stuff. But when you're looking just at the candles and you're reading the price action, this is what's being said. All right. Now, volume's important here only to illustrate this point, because once again, what you don't want to see, and let's go back on the daily time frame. There are very few instances that are telltale as to a failed bull flag. And I can only think of one really strong one, right? Besides what I just said, and this kind of ties into that. When a bull flag is going to fail, you typically see the following. You typically see increasing volume at support. Okay? Increasing volume at support, not decreasing, increasing. So basically, this means that the market is supporting the downtrend. Look at this. On the daily time frame, you can see this is my volume. It's going up, okay? So every time the market goes down, Bitcoin goes down, the volume goes up. That's not a good sign. You want to see the opposite. In a consolidation level where you're supposedly reaccumulating for a move up, what you want to see is that the volume decreases every time the market goes down, and the volume increases every time the market goes up. That basically tells you where the market wants to go. So it's really, this is a tough game. This whole trading thing and this technical analysis thing. But there are certain things that are clear, and there's certain ways that you can read the market, and it's black and white. The market's telling you, if you can read it, it's telling you where it wants to go. Okay? In a bullish bull flag, and you can see this, you can backtest it, you can research it. What you're going to see is every time the market consolidates, the market's going to confirm what it wants to do. And in doing so, it's going to show you that on the moves down, it's going to decrease in volumes, and the moves up, it's going to increase in volume, right? You see quite literally the exact opposite in this scenario. Look at your greatest volume candles here. What are they coincident with, right? Your greatest volume is coincident with the lowest moves. So the moves down are concurrent with the greatest volume. That is not good for a reaccumulation. That's not good for a bullish channel. That is a channel that wants to continue to the downside. That's what the volume's telling you. All right, that's pretty much it for standard volume analysis. But I just wanted to point that out because, yes, it is a bull flag, but bull flags, just like any other pattern in technical analysis, they break up and down. And it's up to you as an analyst, as a trader, to determine to the best of your ability what that's going to be and position yourself accordingly. So now that we have an idea about that, let's take into account the context. This is important because when you're dealing with Bitcoin, even though crypto never sleeps and we don't have regular hours like traditional markets, it is true that on the balance of probability, just taking into account just the number of times this happens, we don't typically see bullish continuation into weekends. Weekends are typically for accumulation, distribution, right? Sideways consolidation, or a straight up bearish reversals. Okay? And it's Friday afternoon when I'm recording this. So if you're bullish, consider the context, the timing. When's the last time we pumped into a weekend? It's not common. Okay, it happens, but it's not common. So balance of probability, this is more likely than not to fail into the weekend. At the best, at the very best, you should expect a continuation of this consolidation, but the consolidation doesn't go on forever. At some point, it's going to decide to break up or down, okay? So this is the read on Bitcoin. Finally, I want to show you one last thing, and it's going to still be using volume, but not the regular volume. I'm going to use the VRVP, okay? So I'm telling you guys, I don't use these indicators much, but from time to time, I'll break them out. There's nothing wrong with them, but I do maintain that the best traders I know, they have a very high comfort level with price action. These candles tell you the whole story. Everything else is a derivative. Okay? So get comfortable with price action, the story price action tells. The EMAs, the VRVPs, VPVRs, whatever it's called, all that other stuff, all these other indicators you can think of, they are derivative of price action. And if you don't get comfortable using price action and reading price action, naked price action, you're going to develop a crutch in your analysis where you're not going to be comfortable reading things, and you're going to be subject to the delay, the lag inherent in those indicators, because every single indicator at some point in time has a fault, has a delta, and most of them have lags. They're lagging, so they need the primary data of your candles, right? And then some other data, and then they need to crunch that, and then they need to present to you a green dot or a red dot or a yellow triangle or something to tell you what's going on. Get comfortable with price action. You will not regret it. I've never met any trader, any serious analyst that has regretted getting really comfortable with price action and the story it tells. Now, I want to show you this vertical volume. So vertical volume is nothing but an indicator reading price action and levels, which you can do by yourself, reading price action. So here, this VRVP is basically showing you where most of trading has happened. So you have obviously this channel having created a certain level of vertical volume or horizontal volume. Why do we call it vertical volume? Anyway, I'm confused. But anyway, this horizontal volume is showing you that this is a level. And, when I first started using this VPVR, it was called VPVR. They changed the name to VRVP. Why? I don't know. I think it stands for vertical something. It's like vertical volume when it's horizontal. I'm not going to get into that. But in any case, it basically shows you levels of support and resistance on the chart. Okay, and again, you can see this on the price action. You can see that the top of this 300-day channel is some level of support or resistance. This is pretty much at or around the midline of this 300-day channel and the midline of this falling wedge. So you have these bumps that tell you where price is likely to take a pit stop. So my initial target for Bitcoin, as you all know, and it's hidden right now. Let's make that visible. Here we go. So my initial target for Bitcoin is the 100K area, like 98 to 100K specifically. Why? Well, it is the midline. It represents the midline of this falling wedge. And 100K psychologically was strong resistance when we were below it. So it should serve as at least temporary support while we're above it. Again, if you go on the VRVP, you can see there's confluence here because that level is the largest peak in our vertical volume. I'm just going to call it the vertical volume, okay? Don't come at me because I did not make this up. It's clearly horizontal, but I believe it's called the vertical volume. I haven't used it in a while, but I believe it's called the vertical volume if memory serves. And so you can see here, if I used this indicator exclusively, I would also come to the conclusion that 100K was my next logical, likely, high probability support level for Bitcoin. This is it's not something that's popularly maintained, popularly held. A lot of people on social media are calling for 110, 109, 108, something like that. It seems to me that nobody is looking at 100K, right? I could be wrong. I don't watch a lot of, analysts these days, but I haven't heard that. But I think that's the next logical level of support for Bitcoin. And once we hit that, to me, that's the temporary support that we're waiting for. And that will create a bounce to around 110, 111, this area right here. And I've given this analysis for a while now, but in the end, what I believe we're going to see is a massive head and shoulders bearish reversal pattern at the top of our 300-day distribution channel for Bitcoin. Okay, I think that if you've been following my work for a while, I said that maybe a month and a half ago. I think that's super elegant. I think it's great. It's beautiful, and typically markets tend to do elegant, beautiful things because they're natural expressions of our buying and selling habits. So in my experience, I'll wrestle with what a market's doing for months, years, not known, and then I'll look back and I'll be like, oh, that looks nice. It resolved nicely. It looks great. In hindsight, why didn't I see that? I couldn't see it. I couldn't see a nice, simple, beautiful pattern that was forming. But so in my experience, I would not be surprised if that formed. And that's consistent with my first target of 100K and my retracement, my wave 2 retracement, because I think, a lot of people not only do not see 100K as my first as a first support level for Bitcoin, but also they don't see the drawdown to 58 to 60K, which is, I think, very, very even more likely. It's likely now, but it's even more likely if we hit 100K. I mean, it's super likely at this point, but a lot of people, it breaks their entire understanding of market cycles and super cycles and what Bitcoin's supposed to do, what Ethereum's supposed to do, what the crypto market's supposed to do, all that stuff. We've had that discussion. Last thing I'll say about Bitcoin. I'm talking a lot about Bitcoin today, but I think it's important. Last thing I'll say about Bitcoin is this. If you followed my work and my Bitcoin analysis for some time, you know that I've said this. This move that is beginning right now, right? Bitcoin first to 100K, then retracing to around 111, 112, and then down again, and then up again a little, then down finally to between 58 and 60. This move is going to create a historic level of liquidations, the likes of which the crypto market has never, ever, ever seen. Okay? And it's like, we talk about FTX, we talk about Luna, we talk about all these watershed moments in the cryptocurrency space that we thought, oh, it can't get any worse than that. Look how many people lost. Look what happened with Bitcoin plummeting from this level to that level. We haven't seen anything yet, because how many institutions, how many governments, how many individuals, high net worth individuals are in the markets and are betting that it's just going to go up, and at the worst case, it's not going down below 100K. How many people? How many people are betting their life savings on that? Like, Bitcoin is just going up and up and up, and that is it. We've spent so much time above 100K. It doesn't factor into their ken that it's even possible that we can go under 100K again. How many people are either publicly or privately discussing that? So many. So best believe, I believe them, and best believe that you have liquidation levels from where we're at right now all the way down to 100K and below. And they're going to get hit because there's not enough liquidity in this world that can move their stop losses and liquidation levels out of the way for what's to come. So what you're seeing now is the CoinGlass chart, and this is freely available. I don't have a membership or anything like that, or a subscription. And you can see, based off of this data, the last biggest liquidation in crypto was on February 2nd. Okay, and that was $1.25 billion of liquidations, of long liquidations. So it must have been a drop of some sort. Okay, the next biggest is going to be with this move, and we haven't even started yet. So when I say that, I mean that literally. Look, right now we're still within the 19-day channel that Bitcoin's been in, right? 19 days, you're in that purple channel. You're only at the bottom of the channel. That is not even the breakdown. That's the pattern that you've been in, the consolidation pattern you've been in. That needs to break first. Once that breaks, then the dump has started. It technically hasn't even started yet. It technically hasn't even started yet. So when you look at Bitcoin liquidations and the fact that we're at the bottom of a 19-day channel and we haven't even broken the channel yet and still your liquidations are already up near levels of other liquidations, like of note, right? So right now you're at around 88,000, let's say $90,000 of liquidations, of long liquidations. That's not even close to, we haven't even started yet and we're already there. So best believe, or sorry, did I say 90,000? No. Sorry, I'm looking at the price. We're at 604 million. Like 600, let's say 600 million. We're at 600 million. $600 million of liquidations today, right? On the 1st of August. Do expect that to increase substantially. Not just for this first move down to 100K, but the subsequent moves, especially the move going from 110, 111, 112 down below 100K. That's going to be the mother of all liquidations. Do expect in that time. And this is why I'm very careful, and I don't mean this to be facetious, or I don't say this lightly. There are exchanges, companies, maybe even governments that fail fiscally because of this. So position yourselves accordingly. This is not a laughing matter. Entire companies can go bankrupt as a result of this from mismanaging their investments in Bitcoin. Because honestly, how many people are seeing this? How many people are seeing this analysis? Right? So that's why I really thought this video was important to do and to spend a decent amount of time on Bitcoin. Now let's very quickly look at altcoins and the Bitcoin dominance chart as per usual. And again, when do we reach a level of support? Well, we have a few different ways to identify proper support in the market where we can say, all right, let's go long. People are being completely premature in doing so, and that's common. People never, well, never, people tend to front run support levels, or they tend to misread what is support, and they typically buy in too early, and then they tend to underestimate levels of resistance, so they tend to sell out too early as well, or sometimes too late. I don't know, whatever. In any case, looking at the total three, right, this is the aggregate chart for altcoins minus Ethereum. This is clearly support. So Bitcoin and altcoins should be on support when this total three is on this level. We've talked about it. I'm not going to rehash this analysis, but this is high resistance, broken, retested as support. This is where I want my altcoins to be bullish again. All right. And at this same time, wherever Bitcoin is, I'm assuming that's going to also be support, because I'm assuming those two things are coincident. Bitcoin to 100K or wherever it lands, which I believe still is 100K, and then altcoins at this level. And then finally, we don't have any excuses for not properly determining the level of support, because we have total three to look at, we have Bitcoin's own chart to look at as a proxy, and the altcoin and the Bitcoin dominance chart. Again, Bitcoin dominance is on an uptrend, and that uptrend should end at the next logical level of resistance, which is here. So we should expect to be bullish again in Bitcoin temporarily, and in most altcoins when Bitcoin dominance hits this level, not anytime before. So this dump is not even close to over yet. It hasn't even started yet. We're not on support. Those are the ways that I'm using, the indications that I'm using to determine support in the cryptocurrency markets. Guys, I hope that helped. If that was useful, like, share, and subscribe. Consider tipping me, Venmo, Litecoin, Cash App at the pinned comment below. And very grateful for those of you tipping me. I very much appreciate it. When you're tipping me in Litecoin, I can't exactly see who you are. If you want to email me and say, hey, I tipped you in Litecoin, whatever, because I love to thank people. But, you know, if you want to say anonymous, that's cool. I very much appreciate your tips in Litecoin. I got it in my wallet. And yeah, if you're interested in my one-on-one services, I do this crypto portfolio mentorship and consultation service. You can go one-on-one with me for up to 2 hours every month, and I send levels for up to 5 altcoins of support and resistance, so you can maximize your gains during this alt season. So guys, that's all at the pinned comment below. Take care. I'll see you next time. Bye.
My prevalent time slot, I vocalize, too deep to localize. Even when I'm right on the surface, you act surprised how I work this, but I can't lie. Many a good alibi. I'll catch you later.
Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. We body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening? Gone like the wind.